time. On Allied Blenders, I must say, amongst the many things that they have done, which of course reduce their interest outgo, and it showed in the quarterly numbers as well. But they have launched the iconic white whiskey. They've launched the Zoya gin. They want to enhance the prestige and above, which is the commonly known P&A market share over a period of time as well. So they're doing a lot of things. Let's talk about the business. Alok Gupta, Managing Director at Allied Blenders and Distillers, joins us right now on the show. Mr. Gupta, good having you. Thanks for taking the time out. I hope all is well. Would love to know, sir, how is the festive / wedding season shaping up? Almost everybody believes that coupled with Telangana doing what, or Andhra Pradesh doing what it is doing, should mean a great second half for liquor companies. Do you sense that too?
Well, yes, I think we're all optimistic that with festive season and Andhra going full steam ahead, it should be a positive outcome for at least all the national players.
Tell us a bit about how have numbers looked like, because when I don't think we got a chance to talk to you post your Q2 numbers. They looked okay on the revenue front. Of course, there's a big bump up on the bottom line because of the interest card. But tell us a bit about how Q2 went by and what do you expect H2 to look like?
I think Q2 went for us as per the plan. Our P&A salience, which was all of 25% a few years back, in H2 we are looking at roughly 40% by volume and 50% by value coming from the P&A segment. We have further strengthened our presence in the luxury segment. We have launched Zoya in the month of January 24, followed by launch of our first blended malt scotch called Art House, which we have rolled out in Maharashtra. And as we speak today, it's already getting rolled out in Rajasthan, it's getting rolled out in Punjab and in Haryana. And we've also announced a partnership with Russian Standard that allows us to meaningfully participate in the premium and luxury vodka market. Iconic White continues to grow. Iconic White did its first million cases in about 13 months, went on to do about 2.2 million cases in the first full financial year. That was last year. And we're hopeful that this year will close, hopefully close to between 4.5 to 5 million cases. So the brand is more than likely to double its volume base. So that's really we are. Where in terms of margin, we closed FY24 at 7.5. H1 cumulatively put together, we are at about 11%. So that's a jump from 7.5 to 11. And Q2, which was our first quarter after the IPO, we closed at about 12% EBITDA margin. So that's really where we are. H2 is looking good for us. A lot of work to be done in terms of further adding a couple of brands in the luxury segment, and of course keeping the good work on the P&A segment up and running. Interest costs are down. We are anticipating our interest costs should be down between 40 to 50%, therefore leaving enough free cash on the table. In addition, we've also taken a few steps towards supply chain security, and we are augmenting our facility both in terms of E&A and malt. So plenty of action at our side.
Alok, hi, it's also Samina joining in. Yes, there's a lot of action on your side, on every front pretty much. But let's close out the revenue conversation before we move on to products and margins more specifically. Your projected revenue growth is a CAGR of 10% between FY24 to 27. Is this assuming robust growth only in the domestic markets, or what are the plans on the export front? Because I'm assuming that also becomes significant, right, at some stage?
No, absolutely right. We are the largest exporter of IMFL out of India. Our distribution has grown from 14 countries last financial year to 22 countries. A lot of focus continues to be in our two strong markets of Latin America and Middle East, and we have strengthened our presence in the African market. The growth bump up largely will come on back of the P&A segment, Iconic being sort of the growth driver, big growth driver in this case. Also, we are seeing growth coming on back of both Andhra Pradesh, and we also see a bit of growth coming on back of Delhi, where we have a policy which is out of an uncertain zone. So domestic and export both put together, that's how we projected our forward growth. But yeah, export continues to be important for us because it tends to be reasonably a little more profitable than the domestic markets.
Okay, I want to talk about Iconic White Whiskey because this is a big bet for Allied. From what we understand, and brokerages are also talking about this. Now, you've talked about doubling the revenue coming in from Iconic in FY25 in terms of volumes. I'm assuming it comes in on back of a low base. So start by telling me what is Iconic contributing to your top line right now? Where do you see it in 1 year? And also, while it all looks pretty solid at this stage, the fact remains that this sector, this vertical is quite competitive, right? So you might grow sharply on back of a low base, but how do you maintain market share and expand once the base goes up?
Right. So the growth is coming on a base of 2.2 million cases. So I wouldn't say it is small. So 2.2 million cases growing by another 100%. It's a pretty big jump. I think with Iconic, what is interesting is the way we position in the market. Typically, conventional wisdom commands that you cross-line the brand to an operating segment. What we've done in case of Iconic is that we sort of price positioned it between a deluxe and a semi-premium, which is between an Imperial Blue McDowell's #1 as one segment and Royal Challenge and Royal Stag as the other two operators. So all the four brands put together are about 120 million cases out of the 400 odd million cases in the industry. So I think it is able to get consumers from both segments. Also, we are seeing a lot of startups coming up, the new startups coming from legal drinking age, coming into this price point. So I think it will have multiple sort of levers of growth. One is that it is operating in a very, very large 120 million case segment. So every 2% market share shift actually translates to significant volume. And I think being a younger brand, it is likely to get a slightly higher share of the new startups. So we stay sort of optimistic on the growth of the brand for the next few years. So Andhra is just about Andhra as a state has just about got at it because Andhra was not we didn't have the approvals in Andhra. Andhra billing starts only in December. Delhi billing starts only in December. So there are two new markets, and I think you spoke earlier about export. We're also seeing a growing footprint for Iconic in the international markets.
Mm-hmm. So, Mr. Gupta, I heard you say that the volume growth, correct me if I'm wrong, but volume growth 40% from the premium segment and 50% value growth, if I'm not wrong. But I would love to know what is the kind of overall volume or value growth consolidated that you envisage for the second half? Because for you, the story in the first half has been about this IPO, interest cost reduction, uptick in PAT, and yes, doubling of margins from 6 quarters ago. So that's phenomenal. What about top line, sir? How does that behave or in H2 versus what you did in H1, say? Or FY25 or FY24?
Yeah, I think I just add one more KPI to what you've just said. I think you will see a significant change in our gross margin. Till last year, we were operating at about 37%. Q2, we are at about a 43% gross margin. So there's about a 600 basis point expansion in the gross margin that has come on back of focusing on profitable market. As far as the volume growth guidance is concerned, we are looking at early double-digit volume growth, H2 and going forward.
Okay, I have a small technicality question, and that is on the Telangana receivable, right? If I'm not wrong, the amount due is about 350 crores. Now, what's the status there? I mean, almost everybody wants to know, does that come? When does that come? Are you setting up some timelines for the same?
We had a meeting at an industry level along with the Chief Minister, the Excise Minister, and the Principal Secretary. That was the month of July. So I can only confirm that the program that was promised to the industry has indeed been put into place. And I think the entire industry, and including us, for the last 45 days, 6 to 8 weeks, have been getting the receivables on time. So I think over the next 2 quarters, we should see significant improvement in the receivable from Telangana. I think we are out from an uncertain zone to a certain zone.
Just to clarify this, Mr. Gupta, so this, I mean, does this take into account the 350 crores of outstanding receivable as well over the next couple of quarters, or is it difficult to say?
My sense is from what we've seen in the last 6 to 8 quarters, over the next 2 quarters, we will see significant reduction in the overdues for the industry and including ourselves.
Mr. Gupta, you know, a lot of your plans are dependent on the P&A segment growing, or is very P&A segment becomes very critical to your growth strategy, right? Are there any operational challenges that you face so far? Anything that could potentially derail these very ambitious plans that you know you're setting out for Allied? And the reason we ask you this as well, because the going is good, it would also be good to know what risks stand.
Well, I think let's just divide this into 3 parts. First is from a demand servicing standpoint, I think we have a sufficient capacity to service demand. We always keep our network at least 25-30% more than what the demand outlook is. So from a demand servicing point of view, we do not see any significant risk. We do not see any significant risk in terms of raw material or supply chain security. So far, on the margin front, the commodity cycles have been favorable to neutral. So from a margin front, there could be some risk if the commodity cycles were to turn unfavorable. But so far, the outlook is pretty neutral. So I do not see any significant risk on the margin front. I think key thing is going to be to continuously push growth in profitable volume and make sure that we are growing with the focus on gross margin and not sort of chase volumes where margins are not coming. So from a demand servicing point of view, supply chain point of view, I think we are well covered.
You've got very ambitious expansion plans as well, about 525 crores over the next couple of years. Now, how are we going to fund this expansion plan, and what is this backward integration going to do for you? Because I'm assuming some sort of cost efficiencies will come into play, but how will that play out? Because I'm assuming cost of funding will see an impact in the first 1 to 2 years, but the same to ensure operational efficiency is still 2 to 3 years out.
Right. So I think we've been fairly careful in terms of the projects that we've picked up. We have picked up projects that are largely around supply chain security and around which impact our gross margin. So currently, for every 100 liters of ENA that we consume, we roughly make 1/3 and buy 2/3. The project that we have announced is to take our capacity from 1/3 to about 70%. We also announced a project to establish India's first single malt distillery. Again, from a make or buy perspective, we make 0 and buy 100%. That gives us 100% security on our malt. And the third project that we've announced is PET for the state of Telangana, which will produce about roughly 600 million bottles, which will essentially get consumed within the state of Telangana.
Alok, how will you be looking to fund this?
Well, the investment of 527 crores is required over a period of 3 years, of which only 180 crores is required in year 1, 220 in year 3, and balance in...
50 crores right now, how will you fund it? Is it going to be through debt or internal accruals? The reason I ask is because...
I think it will be internal accrual and partially through debt.
So some part of the interest cost will go up again then?
Yes, some part of interest cost will indeed go up.
Okay. I have one final question, Mr. Gupta, and that is on the slightly medium-term trajectory. Almost everybody pencils in that with Andhra Pradesh doing what it has done, or Andhra Pradesh, Telangana, the volume growth of about 12 to 13% for companies which have some exposure to that state, you being one of them, looks to be a given for the next 2-3 years. My question to you largely is though, is that the nature of the game? 12-13% volume growth for the next 3-5 years, or do you believe global businesses plus maybe other states plus deeper penetration can improve the volume growth? I'm not saying 12 to 13% is a bad number. I'm just asking whether that is indeed what you believe in, or do you believe that it is different?
So first, your point to Andhra, we did 1.8 million cases last year. We should close at about 3 million cases this year. So for us, Andhra is not a 12% growth market. It's a significant growth market. On your point on overall growth, we have to recognize the fact that we have Officer's Choice, which is a very, very important brand for us, which is about 20 million cases. There we see the growth to be high single digit. And in the P&A segment, which is Iconic, Sterling Reserve, and OC Blue, we see the growth to be double digit. So the blended growth is early double digit. We have to keep in mind that Officer's Choice, being a large brand, will only grow single digit. So it's a blended growth for the portfolio.
Okay, but sorry. So then, therefore, I'm still coming to my question: is about 11-12% growth a number that you work with for the slightly medium term, let's say 2 to 3 years or 3 to 5 years, or can that number be different because of global exposure, etc.?
I think with the changing the policy that is changing in Andhra, I would say a 12% plus growth number would be a fair number to assume.
And this includes even the tailwinds that come in from the global exposure that a lot of Indian liquor is getting.
Absolutely.
Okay. Great. I'm presuming by what you answered to Samina around how you will fund the capex, which is internal accruals and debt, you do not look at any equity fundraise in the next 6 to 12 months.
We don't envisage any equity raise in the next 6 to 12 months. That is indeed correct.
Okay. So Gupta, just very quickly, you've talked about your margins already, but your margins are fairly healthy at 12%. But you do have a goal of 15-16% in the next 2 to 3 years. Realistic goals, is there any risk of outdoing
Absolutely.
that margin of 15-16%? Upside risk there?
So the projects that we've announced in ENA and malt space and PET space should have about a 300 basis point impact on the overall EBITDA. So along with the current margin of 12 and 300 basis point margin coming from the capex investment should get us into a 15% zone, and we expect a further bump up on back of the portfolio that is undergoing a change. So we put ourselves at industry parity EBITDA at 15% plus over the next 2 to 3 years, and that really is the big goal that we are chasing.
One last question, Alok, and I know we are getting a little greedy, but you've had Zoya, you've had Iconic, you obviously have Officer's Whiskey, but you've always talked about increasing your offering to increase your market share. Tell me what market share is at right now, and if there are any new products that are in the offing that we can expect as early as this quarter or next quarter.
So we're currently at about 8% overall market share of the industry. Right? The industry is about 400 odd million cases. We do north of 35 million cases this year. We've launched from a new product point of view, our focus is largely in what we call as the luxury segment. So apart from Zoya, we have launched Art House blended malt scotch, which is now available in state of Maharashtra, available in Haryana, available in Punjab, and getting rolled out into a couple of other markets. And we've also announced launch of Russian Standard Vodka, which should hopefully be in the market in Q4 of this financial year. And we should see at least 2 to 3 more new launches in the luxury segment over the next 3 to 4 quarters. So the luxury segment is where really the big focus is in terms of new brand. We should see the current number of brand in that portfolio from 3 going to at least 6.
Very, very exciting, Mr. Gupta. Good luck. The company, of course, has been having a roaring time in the markets. It had a stellar performance on Friday. This morning, too, trading with the positive buys. Good luck, and we'll hopefully see you soon.